lowest profit margins. It was trading at the lowest valuation relative to earnings and had a very unhappy shareholder base, but there was nothing they could do about it because they were inherently, again, the biggest investors tend to be very passive. And we saw an opportunity, and the opportunity was if you could replace the worst CEO in the railroad industry with the best CEO in the railroad industry, a lot of money could be made. And we bought first 12% of the stock and then another 2%, so about 14% of the stock. We recruited a guy named Hunter Harrison, who is widely considered the best railroad executive of all time, certainly in North America. He had retired at 65. He was 66 and a half. He had signed a 2-year non-compete with his employer, and I think the biggest mistake they made was a 2-year non-compete because he was running the other Canadian railroad, Canadian National. And we hired him as a consultant. He helped us study the railroad, and he had plenty of fire in his belly. And we said, look, would you be interested in a day job? And he said, let me check with my wife. And she said, you know what, it's time to get you out of the house again. And
my wife says that all the time.
And we recruited him, and then we had to simply put him in place. Now, the problem was Canadian Pacific has one of the most sort of esteemed and illustrious boards in Canada, at least at the time. And it was the former head of the Royal Bank of Canada, the former CEO of Suncor Energy, the former head of the steel business. It was a very, very important board. And they didn't like the idea that this idea was coming from outside the company, so they said no. So we went to the shareholders and we ran an election, a proxy contest. We put up 7 directors for 7 seats on a 13-seat board. And the shareholders voted with us 90% of the time and voted against the other guys. And they got between 3 and 11% of the vote. We put our directors on. We did a review of the best CEOs in the world. Turns out the guy we identified was the best guy. We put him in as CEO. That was 16 months ago. And it's almost the most profitable railroad in North America after 16 months. That's how quick this guy goes to work. The stock's gone from $46 to $151 a share. It's, a little under $8 billion market cap to a $25 billion market cap. And that's kind of the perfect example. Now, it doesn't always work that way. And I have a feeling that Peter might ask me about one of those cases.